Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news Wall Street is down sharply today. But first, tomorrow Fonterra will update their farm gate milk price forecast, and today we got the results of the latest dairy auction. On the face of it, it was a good event, with prices up 2.2% from the prior auction 2 weeks ago. This was the first rise in 14 auctions dating back to May. In that time, however, prices have fallen 22%. The downer on all this is the rising New Zealand dollar exchange rate. Today's 2.2% result is actually only 0.6% gain in local currency. So it means very little in the overall scheme. Still, a rise is better than a fall, but it won't change Fonterra's calculus tomorrow, when a number of analysts expect them to cut their forecast payout. Elsewhere on Wall Street, they've had a sudden change of heart about what the China-US trade talks all mean. They are now following the bond market's view, and today the S&P 500 is down a massive 2.4% in early afternoon trade. That means its 2018 gain is a mere 1.2%. Today's about-face is a major event in terms of market sentiment. Part of the change of heart is that there appears to be confusion about what Xi and Trump agreed. Even though it is growing, the WTO says global trade is in a crisis and that the benefits cannot continue when large countries take unilateral action which deviates from common rules and principles. They say the traditional goods trade is the most vulnerable, but the future is bright for digital trade. The OECD is reporting that inflation rose 3.1% in the group in October, up from 2.9% the month prior, and boosted by rising energy costs. Of course, they've fallen back since then. Along the same lines, the EU is reporting that their producer price inflation rose sharply in October by 4.9%. In Australia, the RBA held its policy rate at 1.5% as expected, noting that inflation remains low and stable, employment is growing, and their economic growth is on track. They're upbeat about higher wages. Only house prices and their falls in some large cities are on their watch list, and they see that as a necessary rebalancing. They aren't buying the biggest threat to the economy line. But what might seem a threat are food prices. The severe drop in their wheat crop output due to drought risks in grain-based foods is raising sharply their prices. Australia has lowered its wheat production forecast by 11% to the smallest in a decade amid a crippling drought across most of the country's southeast that may cut exports from the world's fourth largest supplier and raise prices region-wide. Their winter crop production is forecast to be 20% below their 20-year average. US Treasury yield is still on a downward path, now at 2.89%, a significant 10 basis points drop. More importantly, their 2-10 curve has slipped another 8 basis points and now under 10 basis points, and a clear fear signal. Gold is up $4 to $1,237 an ounce. US oil prices are a little higher today at $53 a barrel. The Brent benchmark is now just on $62 a barrel. An agreement within OPEC for output cuts seems close. And the Kiwi dollar is starting today little changed at 69.3 US cents. On the cross rates were unchanged at 94.2 Aussie cents and 61.1 Euro cents. That puts the TWI at 73.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.